Okay, guys, welcome back to smarthelping.com. It's 10:54 a.m. April 28th. We're going to get one more financial model in for the month, and what I've done this morning is a car wash model, and it's for a tunneled car wash. So that's the one where you build this kind of elongated, you know, uh tunnel, and the car goes on it, gets on the track normally, or you could have it with just they drive through, but normally it's just a track and it pulls them through different stations and it cleans their cars, and you have different pricing levels that they can pay, maybe 6 or 7 depending on what kind of services they want. So first we have our startup costs, and these can obviously change depending on your situation, but generally these are all the things you're going to have to take account for, which is, a vacant lot, unless you already own one, site work, soft fees, traffic studies, permits, engineering, closing costs for the loan, appraisals, just everything else to get started. Sewer and water tap ins, so you can obviously have your water hooked up. The actual construction of the building, because it's going to be this big long building, probably 6,000 square feet or more. Car wash equipment, so whatever you're going to put in the car wash to actually clean cars, and that could vary depending on what all you're going to have. Then we've got signage, security system, and then working capital reserve to get you through while you're still constructing, just and before your revenue starts kicking in. So it's like your cushion. So then we have a total cost here, start date of the loan project. You just put the first day of the first month um, that you plan on starting your loan and construction. Then we've got the amount of your total cost that you're going to finance. You can put 0% if you're doing all cash. You can put 50%. It just depends on what your leverage is, and that will populate through the model and your debt service and mortgage balance and everything. Then you've got your cash needed, which is just a function of the percentage financed. So here we need 1.3 million. We're gonna finance 20% of it, so we really only need 1,068,000 cash. Then we've got lead time in months. So this is gonna go out in months until it's basically as administrative and other costs are accruing every month, but you still are not collecting revenue or you're not open for business yet. So that might be 4 months, it could be 6 months, and the cost during that time could vary. So that's the first part. Next, we have our running costs. So this is, what you're going to be paying every month for the ongoing operations. So we've got startup costs are just one-time things that go out once. Then we have these running costs, which are every month. And I've broken it down. I've looked at some industry standards and some studies that show what a funnel car wash does. And what I found was, for electricity, gas, water, detergent, claims, repair, and maintenance, those are all the variable costs I could think of. This is the amount per car. So the main one is the water is only 16 cents a car. That is assuming you have some kind of water recycling, which once you get into the details, you'll see that can, if you do too much recycling, you're going to have to pay for chemical cleanup and issues. But if you don't do enough, then obviously you're using a ton of extra water. So it just depends on how you manage that. But the one study, they showed that on average their total water cost was 16 cents a car. We have then fixed costs. So you just got site labor, whoever's there working the operation, maybe 1 or 2 people a month, and you put their total salaries in here. Office labor, marketing, accounting, insurance, other fees, management, rent, and then other costs. You could put in anything here. So these costs will all populate in the monthly and annual summaries, and then based on um, the car counts, the total car counts per month, you'll get a cost that reflects these figures. Then we have our revenue assumptions. So it looks kind of busy here, but it's not. Basically, you're saying per year how many daily, what's your average daily car count in year one, in year two, three, four, five. So we got our daily car count at 3,100 to start, and then 3,450. Sorry, that's monthly. I remember I converted it into months from days, or from a daily to a monthly. Obviously, you're not going to be doing 5,000 cars a day in one tunnel car wash on average, but you might be doing 5,000 in a month. And if we put this into monthly figures, you can see about per day what you need. It's about 100 cars a day on average. Now, if you think your average for the year is going to be less, then you could put that down, or you could put it up. Then we've got your price and your percentage of each of the total monthly car count that's at each pricing level. So this is obviously you're going to have to do your own research or try to figure out your own assumptions. But I've just allocated I've averaged it so that the weighted average based on how many cars are in each dollar type, you're looking at about 12 or $13 a trip on average with this current setup. In the average, you can use some product to find your own average. If you start changing this, it's just some product of these, and then the comma some product of these, close parenthesis divided by the sum of your percentages. So right now you can see $13.20 is our weighted average cost or price per car that we're getting each year. And I've allowed you can change it over time if you think things will change over time in year 1 through 6. And the reason why this is a 5-year summary, but the reason why we have year 6 is because the summaries look at total time, so 60 months, and that might be spread between years 1 and 6. If you do, start 6 months into year 1, then a full 5 years would have to be 6 months into year 6 if you're just counting like 2017, 2018, 1920, so we had to do allocate for that, so you have a 1 year kind of buffer that will still be counted if you want to track a true 1 year's worth of time. So there's your revenues, how you build it. Then we have if you potentially want to sell the business at the end of the year 5. I've got 2 valuation methods, pretty simple. Obviously valuation is tricky, but I've just put, you can either pick an EBITDA multiple, which is basically your net operating income times the number, and I've just put 1.25 in there. That's kind of, the number could be less than 1, it could be more than 1. That's just what I see a lot. Then we have percentage of sales, 55%. That could be 45, 35, 85%, 100%. It just depends on the industry and the market and all kinds of other factors. But if you do pick your method and choose and put in your amounts here, that will show up in year 5 of the last month and give you a dollar amount based on what your operations look like in that month. Okay, so that's how you build all of your revenues here. Financing, this auto updates. You will put in the loan term, interest rate, payment per year, and actually you will not change this because this is based on the first tab. From the financing tab, that does flow into the P&Ls. But here's your car count. Here's your P&L summary, and we start with car count, total count, the percentage that is in each type of pricing level. You see these all will tie in and they increase over time based on whatever's put in the assumptions. So you got car count, revenue, total monthly revenue, get your variable expenses, fixed expenses. Then we've got total expenses, so you do your total revenue minus the total expenses to get this figure, which is basically EBITDA. Then we got our profit margin line, you got debt service coverage, you've got your actual debt service, what you're paying each month in principal and interest in total. You got a running balance of the mortgage. Then we've got cash flow items, so this is the initial outlay of cash, which is the amount of total costs to start up less the amount you're going to finance. Then we've got cash flow before tax, which just takes into account the sale of the building and the construction and setup of the whole business. You can see the last year this will show up based on what's in there. So you can see right now it's 461,000, which is a multiple, EBITDA multiple, so 1.25. So you can see here, to get that number, I just do, if I did this times 12, because it's a monthly, times 1.25. That should be oh shoot. Wait, no, that's right. And then the difference between the 662 and the 461 is your mortgage. So we subtract our mortgage balance. That's what I was missing. And then you get your 461. Because if you sell the business, well, you still have this debt if you haven't paid it off yet. And that's what it would be on that month, assuming you made all these payments. So your cash flow is 461. Then you'll have taxes and whatever, but that's not included in here because it could vary. So we have cash flow before tax per month. Then we have a running cash flow balance, which just takes into effect what you're putting out in cash, your monthly operations, and then in the final sale year, you could see it's a little bit more with that extra cash flow. And this is the running balance. So assuming everything happens that you have on here, at the end of year 5 you will have $1.2 million saved. Well, your cash balance is 1.2, but that's starting at negative 1,068,000. So let's say we started in the bank at $1,250,000. You spent $1 million in cash, you got 182,000 left. Then you're operating for a while. You lose the first 4 or 5 months while you're getting set up. Then you start to gain, and then eventually the cash that you have in the bank, assuming all this happens, is 2.4 million. Then we have the same exact setup, but it's just in annual summaries. And you can see on the sidebar here we've crunched these up, so if you want to see all the lines or more of the lines at once, you could see, total car count, total revenue, total variable expenses, total fixed, your total expenses, and then your net operating income on an annual basis. And profit margins, debt service coverage, your principal and interest per year, and your cash flow, and these all add up to the same thing. You see 2,470,000 is where we get after these 5 years of operations. We also have break-even year. You can see that's when we cross over from the amount it cost in cash outflow and when the business actually pays you back. So this is saying year 4. We also have that in a monthly that says year 42. And all this is all automated with formulas. So that's pretty much it. There's your, you want to start a car wash. It's probably more expensive than you thought, but you want to kind of lay everything out. This model is built to tailor to that business with a tunneled car wash. We also have the return summary, so this kind of sums it all up. You can see here total cash investment, years is 5, months is 60, IRR 23%, break even year and month, I'll auto populate your total dollar return, total ROI, annualized ROI. So the total, these three are not including the cash outflow that you did to start the business. So it's basically saying a lot of people think of a business as the multiple it gets on your initial investment. So this would be like a 2.1 multiple of investment, 2.1x return. But then some people want to say, well, if I account for the initial investment, what is my return on top of that? So this is saying, well, you're going to make 1.2 million on top of your 1,068,000. So you get paid all this back, and then this is what you actually make in cash flow. So, and that ROI is 114%, 22.9% annualized. So that's saying, assuming you do absolutely nothing, you're besides, or let's just say the 1,068,000 goes out and comes back and doesn't change, you will, on top of that 1,068,000, make 244,000 a year. Assuming all these assumptions, obviously. So this could change based on whatever you put in. Then we've got some charts: revenues, expenses, profit, car count by wash type, profit margins, debt service coverage, and then some instructions here. And I've also put a lot of comments into all the boxes where necessary, mainly in the assumptions. We have some clarifications, the startup costs. But this should be a really good tool, useful for anyone looking to get into the business. And it's done in a very dynamic way so that the user can easily just enter whatever they think their assumptions are, and then see 5-year, monthly, and annual summaries, return summary, and the charts. Alright, this is smarthelping.com, and excited to get this model out. I'll see you guys. Probably the next video is going to be the monthly update for April on my just overview of all of my own activities. And the trading is just kind of paused at the moment, but maybe we'll pick it up next week. We'll see. Alright, have a great weekend.